Well, I think from the policymakers' point of view, deleveraging has been the key focus for the year, and with the three red lines, being in check, some of the high financing, companies, property names are under pressures. So we do expect this kind of scenario will continue. There will be, continue headlines, but overall, with the solid and the lower financing cost type of property company, are the ones we recommending our investors to take a closer look.
Tommy, can I ask you about policy and strategy here? Because one of the other comments to come out of the meeting today was from Fang, and they're very clear that they're calling for stable policies to try to avoid systemic risks and a liquidity crunch. What do those stable policies look like, and how could Beijing avoid getting this one wrong?
Well, ultimately, it is where the property price and the demand, right, driving the overall sectors. So we want to make sure both our investors and also the policymakers understand with the market price discovery mechanisms. So we need to find an equilibrium where the market can understand where the policy will be setting. So for example, first half of next year, with the three red lines being in checked, whether the government will ease both from a policy point of view and also from a liquidity point of view.
Tommy, do you agree with the analysis that there are 65 million empty apartments and homes in China, testament to the ghost cities, so to speak, as well? And as such, we're only at the tip of the iceberg of what is going to be an absolutely enormous problem for municipalities and their lack of ability to get extra income from land sales, for growth as well, and indeed, dare I say it, the indebtedness that's always been raised by consumers and indeed individual property companies. A lot of empty homes spells to me that there's still a big clearing mechanism still to go.
Well, in China, there are two angles we should look at it. First, I think there are growing demand driven by continuous demand and increase of living standard, and at the same time, Chinese consumers or the savers, they are looking at property in many years as what we call hard deposit, right? So there is this demand increasing for better housing and also this so-called wealth preservation for housing as well. So I think the overall demand side is adequate, and the overall, I think here is we're looking at is some of the highly levered, property names with very high financing costs. So we need to have the confidence in the overall ecosystem to stabilize the market.
Tommy, I think some of the questions that UBS itself has posed for 2022 are the best, to be honest. And the one around China that attracted me was, is China ultimately uninvestable for an international investor at the moment if they don't understand how the government is laying down policy? Or are these stocks finally becoming cheap enough to buy?
Oh, we are looking at very closely, and our view is with the stabilized policies, attractive valuations, and also more accommodating physical and also liquidity policies. We expect some good momentums into the year end for equities market. So it depends on where investors' investment horizon and how they allocate it. And most of our clients globally, they are still underweighting China equity as a whole, especially for the onshore market. So for that perspective, near term and also medium term, we definitely see potential upside from here.